Welcome back, everyone, to the European VC podcast. Today, I have a dear friend of mine, Nico Schoenenberger from 10x Founders with me. We are covering some ground today, but we're focusing more than anything on building 10x Founders and the entrepreneurial community around 10x Founders. Of course, that counts both as super powerful unicorn founder community as well as the famed Bits and Pretzels conference. And then we're diving into entrepreneurial decision making as a fund manager, as well as follow-on reserves and principles for round preemption. I hope you enjoyed this episode as much as I did making it. And if you do reach out and hook up with Nico, because he is one incredible human being.
Here's a few words from our beloved sponsor. This episode is brought to you in partnership with 0100 Conferences, which organizes intimate networking events connecting LPs and GPs in private equity and venture capital firms across Europe. A more legitimate setting makes it easier to stand out, get noticed, and leave a lasting impression. Don't miss the opportunity to engage in highly effective networking with investors focused on the DACH region. Their upcoming event, 0100 DACH, will take place in Vienna from February 18th to the 20th at Hotel Savoyen, Vienna. Attendees will include LPs and GPs like Bodelton Capital, Lennartz & Co., KfW Capital, and many more.
Whoa! Thank you.
Save the date. February 18th to the 20th at Hotel Savoyen, Vienna.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.
This show is not investment advice, and the hosts of this episode may be invested in the funds and companies featured.
Nico, welcome to the European VC podcast.
Hey, Andreas, my pleasure.
I am stupidly happy to have you on the podcast, and I can tell you why. I had a lot of good time with you at Bucharest in Bucharest at How to Web, so that was great. Thank you, Bogdan, for bringing us together. And also, you asked Andreas, how can I help? Are there some people I can help you introduce you to? And then I said, well, there are some things. And then you made a few introductions, and all of them have come through being incredible. So thank you so much for that.
No, my pleasure. It's part of the business model and part of my job, I guess. So always happy to help.
Well, you do well then. So let me just do the real quick stats on you, and then you can add some context to it. So Nico Schoenenberger, that's a very German name. You are at the investment team of 10x Founders, which is a 160 million euro fund one. And that, of course, also means that that's the AUM of the team. You are headquartered in Munich, in Germany, and you're focusing on pre-seed and seed. Europe is 70% or so, and the US is the remaining. You're sector agnostic, but personally, you focus primarily at B2B SaaS and Fintech. You have some notable investments behind you. Those are Ixana, Magic, Ivy, Fernride, and cylib, something like that. Did I get that somewhat correct?
Absolutely, you got it correct. There's just one minor addition. I mean, my name is originally from France, so my father's French, my mother's German. So we kept the French family name, which is from Alsace, basically. So somewhere a mixture between German and France. So I spare you the French pronunciation. And I feel very German after 25 years here.
French pronunciation of Schoenenberger. What is that?
Man, in German, it would be Schoenenberger, as you said. In France, you could pronounce it, let's say, like as a Schoenenberger. I never used that, frankly.
That is interesting. Okay, Nico, let's get into it. Today, we're going to talk all about 10x Founders. I actually don't know the 10x Founders team too well. And that's a huge mistake because obviously 10x Founders has been created by the Bits and Pretzels dude, Mr. Felix Haas. And maybe you could just, before we dive into it and so on, talk a bit about the founding story, even though you're not Felix. Maybe you can talk a bit about the founding story of 10x Founders, and we can dive into this whole entrepreneurial community that formed the fund of 10x Founders.
Yes, absolutely. I mean, like you already pointed out the right stats, at least from a technical perspective. And yes, I'm not Felix, but I joined the team and signed my contract to join the team, basically, when it was not even a name for the vehicle we were supposed to raise. So I've been the first employee back then, not with them since day zero, but maybe day one. So a couple of months after the partners initially thought about potentially raising a fund, I was already at their desk and joined the team then 4 years ago. It's been a hell of a ride, and I'm super glad to dig a little bit deeper together with you into our founding story and what I believe makes entrepreneur-led funds very special in today's world.
Let's just go there directly.
So first of all, I think that, and you also say this in the show notes for this, that it's not as common as one might wish for, that we would have founders that turn VCs. And maybe you can talk a bit about that and how it makes you different and so on.
Yes, absolutely. I mean, like maybe in that regard, it's important to understand the full backstory of the fund. And that was, we only started 4 years ago. My partners have been already around in the entrepreneurial ecosystem for the last 20 years. So they built their own businesses. You mentioned Felix, who not only runs Bits and Pretzels conference, but also ID Now, which is the German Onfido, one of those, let's say, KYC providers in the European continent. Robert, Andreas, and Jan, 3 others of my partners, they're a little bit less known, but they scaled an online dating business to, I think, 35 countries in total. And starting the early 2000s, when at least they tell me online dating was the hottest shit in VC world. So they got Index Ventures on board back then as an investor. They made some first secondaries and then started to angel invest. When that was not much of a thing in Europe, hit Adyen in Amsterdam, a couple of other good companies over the last 20 years. So in total, I think it's within the partners that are now running the fund, approximately 150 investments with private capital. And so for us, it felt like a very natural transition to say, okay, if we really enjoy what we do, which is working with founders at the end, but it's also financially successful to some extent as our track record as Angels shows, and there's absolutely no reason to not do it properly. And that was then, I think, the realization that the partners came up with in 2020, approximately, during the middle of the year, in the middle of COVID. And since then, we started to execute. So I joined towards the end of the year in 2020, and then we raised the first fund in 2021. Quite special, only from entrepreneurs and business angels. So there's no corporates, no governments, no institutional money behind for Fund 1. And back then, I think it was a very natural strategy for us because we knew all of those people from the last 20 years in the ecosystem anyway. And we said, what if we bring all of those people together? We bring network, we bring capital, we bring knowledge, basically into one single cap table position, and then act as angels to some extent, but with the pockets and the deep pockets that you could only have as a fund. So we can get in very early with those businesses. We take the same risk as we're used to when being angels, but we now have basically also the reserves so that whenever a company breaks out, that we can follow on until pre-IPO and always provide a positive signaling to the founders, work with them. And me being part of the team, plus a couple of other people, we now finally also have the resources to support the founders and basically not only invest as angels previously, but be there as a first phone call on their side, like whenever it's required, to share entrepreneurial experience from all what the partners have done in the past.
Could you tell me a bit about, because there's some of the angel philosophy or typical angel investing style that doesn't scale super well to 150 million. I'm sure you've also, changed a bit of that when you went from angels to being a fund. Could you maybe talk a bit about that transition from being an angel to being a fund?
Yeah. Totally. I mean, like in the end, we now suddenly have way more capital available. I think that's what you pointed out very correctly. And that's why we needed to adapt our strategy. And the strategy is, I think, in the end, solving for 2 main issues that we typically see in the industry. The first one is that it's an outlier business. So in the end, you will definitely need to hit one of those Adyens, Revoluts, you name it, of this world to make venture a success. And you can do that as an angel because you always squeeze in with small tickets into oversubscribed rounds. And we try to behave the same now with running the fund. So we run a split strategy of lead and follower tickets. And the follower tickets are basically the ones where we know, okay, we wouldn't have had a chance to enter such deals as a lead. So we keep our optionality open by investing as a follower in oversubscribed rounds. And that hopefully provides us access with many of the companies.
You
Please.
Invest as a follower in oversubscribed rounds. Is that a criteria that you have inside? That it
does not need to be oversubscribed, but I think if it is oversubscribed, and we see over the last couple of years strongly increasing competition for the best founders and the businesses they build, and then of course there's only one lead position that a fund can take, but they're always super happy to take someone along also from a follower position who brings the right entrepreneurial experience and network to the table. And so at least we increase our chances to get into those rounds. If we're not competing for the lead ticket that maybe some of the other well-established funds may want to take, but we offer from the get-go an opportunity to join as a follower and then provide basically our value add as we can, but without having, let's say, like the eventual competition for the 15, 20% cap table stakes that other funds would be asking for. But we're trying to not fight basically for the last percentage points, but just try to be helpful and be part of the story. And I think Magic is one of those very famous examples I think no other European investor even had access to those rounds, but we did because we were very flexible in terms of the ticket and the ownership stake we'd ask for. And eventually now they became a unicorn. It's the first in our portfolio these days. And it's to some extent a proof point, I think, for the strategy that we run next to being able to lead rounds, what we also do, but that we also have that very strong follower bucket to increase chances to hit one of those generational companies in Europe.
Could we maybe just, and we're going to talk about decision making inside the firm as well, because that's part of what's different for more entrepreneurial minded funds sometimes than the more traditional ones. But I'd love to ask you because now you had the example with, you said two things that are super important, right? You said, okay, as an example, Magic, we got in because we're more flexible on both. I think pricing, what you said is, you didn't say pricing, but you said ownership stake and your requirements, but that often translates to pricing as well.
Totally.
How do you think about this? Because we always say that, or at least that's what I think very much, that venture is very much a balance between knowing when to be disciplined and when to throw discipline out the window. How do you think about this?
I think it perfectly describes also one of the key principles that we operate with, that we say we are diligent whenever we can. So we like to build relationships with founders, spend more time with them, diligence the business very properly. And I think we owe that to our investors. But we also keep, let's say, like a very opportunistic and entrepreneurial mindset, so that whenever we don't have the time, then let's just try to make a decision under incomplete information, because particularly if you invest pre-seed and seed, in the end, you won't find basically, well, you can understand the market, you can understand the customers, if there's any, you can understand the team, but in the end, there will always be so many unknowns at that very early stage that, while with being angels previously, we're very prepared to take exactly that kind of risk and make very fast decisions. This has also enabled us, I think, for example, as Magic, to get into rounds that were just about to close, where the founder said they want to wrap up the round by the end of the week, maybe end of next week, to say that, well, yes, we try to adapt to those kind of timelines, speed up internal processes, but also, as you put it very nicely, to say, yes, whenever we can, we are disciplined, but if we can't, then we wouldn't want to miss a great investment opportunity just because our very rigid processes internally.
Yeah, and criteria. But those are also what safeguard you. Are you willing to dive into Magic and kind of say what were the things that made you comfortable taking that risk and saying, okay, we're okay, we don't know as much as we'd maybe like to, or we know that we're gonna, I'm not saying that you weren't diligent, but either that's on the criteria on which you threw out a bit of discipline, or maybe it's on the pricing part or whatever. Maybe you can talk a bit more on that case specifically.
Yeah, I mean, in the end, and that's maybe referring back to what is already known in academia, and I think what every other investor will also confirm to you in the end, it's a decision about the founders if you invest in pre-seed, but also a bit at seed stage. And we came in at pre-seed stage. We knew the founder. It's a hilarious guy in a very positive sense, positively very crazy, and very strong vision for the company. And he was operating in a very large space.
No Magic, and maybe you can talk a bit to that, because hilarious guy is not what you want in nuclear science.
No. I mean, like in the end, I think crazy in a positive sense. People just build crazy companies with potentially crazy outcomes. And Eric from Magic, he's one of the co-founders. He's one of them. Very visionary. He knows what he wants to build. And he decided to go basically head to head to what GitHub is doing with Copilot, to basically build an LLM for code generation. And is doing it very successfully, at least if you look at the fundraising history. But of course, all of that was not very obvious when we invested in pre-seed. But what we knew is that Eric is a great guy, that he assembled a stellar team around him, and that he's up to build something in an extremely large market. And I think all of that, like the market opportunity, but also a team where we believed that they can very clearly execute on that vision that they have, made us feel comfortable. And frankly, even if we had like 2-3 more weeks of time to diligence the company, I'm not too sure that we would have found so much more proof points for our investment, things to build conviction on. Because in the end, it was super early stage. We needed to trust him that he brings the right people and that he executes on the right thing. And in the end, so even if you say, well, we were throwing a bit of our discipline out of the window, it still felt to be a very, very good decision, because we based it on what we could diligence, which was the founders and the market eventually.
Just to get a stat a little more clearly, because you said you had have the follow-on capital. what percentage is set aside for follow-ons?
We pitched originally to LPs, I think a 50-50, 40-60 split. And that's what we're sticking to. And the strategy is very clear that we built a large portfolio with initial tickets in the beginning, and a little bit smaller maybe that you would have expected in the end. But we have that capital available to then, yes, of course, continue investing into founders.
You plan to do 70 investments out of the fund? And
approximately. So I think we're now at 75 or so with Fund 1 that we reached already. But we already did 55 follow-on rounds, if I'm not mistaken, in our portfolio. And for most of them, I think for above 50, we also participated. So we take that very entrepreneurial lens that even the best companies sometimes need a bridge, sometimes are standing very close to bankruptcy. As an entrepreneur, I think that's the kind of situations that you anticipate. So you're still trying to be supportive with the founders. But I think the second component of our reserve allocation is also that we never realized that a company works really well, that we can really double down. So in the beginning, we may have only a few percentage points on the cap table, but obviously in the end, it all comes down to what do you earn at exit. And so we try to build that stake over time with some super pro rata rights sometimes, with preemptive rounds that we can take, with like investing in a bridge round where other people don't. And by that, come to a point, hopefully.
How do you think about preemptive rounds? Because I always think it's interesting because on the one hand, you're saving the founder time in terms that they don't have to go out and fundraise, but you're also saying a bit, take it or leave it. You're kind of cutting a process short where they might be, able to get, in their view, better terms. How do you typically talk about this? How do you think about it internally? When do you do it? When do you lean out and don't do it?
Yeah. I mean, frankly, if you look, for example, at the story of WhatsApp, that was, as far as I'm aware of, only backed by Sequoia until and eventually acquired by Meta back in the days. So I think that there's no necessity to always raise from external parties. In contrast, there's always a good benefit to manage your cap table appropriately and only work with the people that you really want to work with, not because of the necessity of raising capital. So if you can, as a founder, and you feel it makes sense to also cut down or shorten processes to focus on business building, because essentially that's what's the founder's responsibility. It's not fundraising. It's just a mean. And then we say, okay, whenever you want to work with us anyway, we are on the cap table, we'll provide you with more capital, then that could be an easy way out. And if the founders decide against the offer, we're of course incredibly supportive. We'll also raise an external round if that's the right route for the company, and basically then in the end also for us. So, but I think just to stress the point, I think the very best companies and the very best investors are very used to preemptive rounds, because they know that they need to build ownership in their winners. And then why even losing on that opportunity by inviting others to join if the right value add is already at the table and the founders want to continue working with you as a fund. So it totally makes sense to just increase your position and tighten your relationship that you have, and without distracting anyone from building a good business.
Can you talk at all about the kind of percentage of which, of your follow-ons that have been preemptive, and maybe also a bit about your thought process doing it?
You mean in our internal portfolio eventually?
Yeah.
Yeah. I don't have the concrete numbers at hand, unfortunately. I can just share some anecdotes. So we had one company, for example, that where we said internally, we're super ready to preempt. The round was still a bit large in the company very early. So we said, let's just talk to a few very selected investors. So keep the fundraising process very lean. You get our support that we do 2, 3, 4 times our pro rata eventually, so that we can fill up the round if you find one party interested. And the founders eventually took the offer, got a great fund from a pan-European fund, actually, that's very well known on board. And then the founder basically went to the US and spoke to a couple of more people, and suddenly there was another preemptive offer on the table. And I think that's the kind of dynamic that we also see with the best companies, that investors are very keen to back those if there's a round or not. And as with a fund, you're never not fundraising. I think the same applies to founders, that they always need to remain very open to discuss preemptive offers if the terms are right, because in the end, it's just saving your money. And as said, it's not, fundraising process can eventually only distract you from building a business. So if the CEO is out of his firm for like 2, 3, 4 months doing full-time babysitting with investors and answering requests, so why not doing the easy route if you have eventually the choice?
And maybe an important point to make here to anyone listening in, preemptive rounds exist so that you can get a bigger ownership stake, not so you can get preferential terms. Because a good founder would always shop around, and a good founder, you don't want to leverage your position to then keep them from, getting a fair deal. And because that will just ruin the relationship down the road. So it's interesting, like
Absolutely.
as soon as you get into this shark mindset, which the word preemptive might sound like, right? It's so important to say it's really a matter of still building the company as a good steward together with the founder. And then it's just a way of making things easier on everyone. And then
Absolutely.
what you get in return for it is just, you can pick up a larger part of the round. That's where it gets interesting. A very good point to make. Let me ask you, because you have a big angel track as the founding team and yourself, and then you raise 150 million with a strategy that is heavy on the follow-on rounds, because 60%, 40% on reserves is actually quite high. So I'd love to ask you, how did your process with LPs and internally, how did you kind of improve your decision-making process around these follow-on rounds? Because that's typically where an angel has less experience and also less network and so on. So I'd love to hear that.
Yeah, I mean, like in the end, it all comes down, I think, to the general notion in the industry also that you want to allocate as much of your fund as you can in the potential winners. I think it's so funds not putting aside money for reserves or follow-on rounds, I think they miss out on a great opportunity. So even though the multiple that you can achieve on those kind of investments that you do as a follow-on, because the valuation typically is higher, it's not as high as your initial investment, but you just avoid being diluted in the best companies that eventually move the needle for you and your fund success. And by that, we thought about, let's say, like follow-on reserves very strategically, because if you have been angels in companies such as Adyen or others that where you enter in like seed stage at a low valuation and you eventually exit the company at like 10 billion plus in the IPO market, you have realized if you couldn't basically continue investing and trying to fight against dilution, what that stake could have been worth just by following on. And so it all comes down basically to that kind of mechanism to deploy as much capital as you can in companies that eventually work. In the end, yes, if you're coming in pre-seed and seed, maybe for Series A, Series B companies, you're not always having, let's say, like that very clear proof points, more or less, whether that will be one of the winners in your portfolio. So we approach it more from a perspective to say, okay, particularly at the very early stage, we just try to be supportive and place pro rata to at least keep our stake. And then whenever we see the first signals of reaching product market fit, of eventually breaking out, we essentially also have the means to put a very substantial ticket. And I think that's resonated very well in the fundraising of our Fund 1, because we could clearly show that story of like, okay, investing as angels, then diluting until IPO in like one of those generational companies. What could you have made just by following on? And we didn't want to make the same mistake now with the fund and keeps those reserves eventually to counter this kind of dilution that will follow until a potential exit of a large company. And being at like 50-50, 40-60, 60-40, I think it wouldn't be entrepreneurial to not keep that flexibility a bit to play around with the reserve allocation. And particularly our entrepreneurial piece would exactly expect that from us, that we keep that optionality and keep that flexibility. But in the end, we're very, very committed to invest in a broad portfolio in the beginning, then double down, and eventually try to put as much money as we can into the potential winners of the fund, so that in the end, it's also a huge financial success for everyone involved.
You've navigated through, so you did the fundraise in 2020, and now we're writing 2024, almost the end of it. So that means if you've navigated through the tech reset. Could you tell me a bit about this journey? Because it's not been an easy one, I'm sure. It hasn't for anyone. Could you tell me a bit about the biggest learnings you've had through this process?
Yeah, in terms of fundraising, you mean in general?
In terms of just managing the fund, all the obstacles you've met. In terms of this model that you run of, I imagine that since you have this flexibility, you've likely also been able to do some or both flexibility in terms of what you're allowed to, but also just the entrepreneurial mindset of, kind of saying, okay, we walk into this not knowing exactly whether we're going to do 40-60 or 60-40. So we'll make that decision through the period. And I was sitting here thinking through, okay, if you raised in 2020, how would your portfolio then pan out, would you then you probably, my thinking is, you probably end up a bit heavy on the initial checks, more than you expected, just because 2020, 21 was so expensive, also a good part of 2022. And then for that reason, you've maybe ended up a bit light. But on the other hand, if you weren't deploying super efficiently or rapidly in the beginning, and held back a little bit because you were still fundraising and different things and gearing up, it's the first fund. Well, maybe you actually didn't do too many deals in the beginning, and then you came to a period where it's that, wait a second, everything's too expensive. So, so I'm curious to hear how it panned out for you.
I mean, like you're touching upon on a few very important aspects. And the first one, I think, is given that we have been a first-time fund, we started fundraising in 2020, we closed the fund in 2021. We had a whole firm to build. So we started out as a bunch of angels, super successful, very good track record, but very limited experience in like actually how to run a fund and to run the people behind. So I was the first hire. I was incredibly lucky, and I feel very privileged that I got that position. But then was basically on the partners and myself basically to hire out more people, more resources. We're now a team of 15 people in total. So we hired more people for the investment team. We brought on people that can support our portfolio. As for example, we have one person called Head of Venture Network, who's particularly being, let's say, like the intermediate between us and our LPs, but also our portfolio founders. So in the end, it all comes down to making introductions between different generation of founders. So I think that was one of the very big learnings, that we needed to master that transition from like angels investing our own money to suddenly needing to have, as you said, that kind of discipline to invest other people's money, but still hopefully doing or making good decisions. And that transition, I think, particularly if you're coming from a very entrepreneurial background, is I think not always easy to catch, because you're approaching investing with a very entrepreneurial lens. You're coming from a perspective where you feel, okay, if I was the entrepreneur, that's how I would basically fix that and that challenge. That's how I would approach this and that market. But suddenly you realize you're not in the driver's seat anymore. So you're investing, you need to trust the people that you back. They are running the show. You're maybe a very happy person on the passenger seat, but you will never steer the business. To get that point right, I think to invest in the best people and not only into the best ideas was a huge learning that we made over the course of Fund 1. And we're still learning, frankly. But I think that's one of the key challenges that entrepreneurs turning angels, turning fund investors eventually have. And the second learning, I think, is that we made in terms of like how to adapt and to play our investment strategy. So in the beginning, we had a plan and we had an idea and we had a fund model, of course, and we just tried to shape exactly that kind of strategy. So are we more leaning towards lead or more leaning towards follower tickets? And we discovered if we run a broad portfolio and want to be very helpful to our founders, then it's maybe good if we're not, let's say, like in the ultimate responsibility of running a board and like signing all kind of like shareholder resolutions. But it's sometimes better to just ride the wave along somebody else who's then eventually leading the round, while we can provide that very entrepreneurial spice to those kind of rounds and bring in our experience. And that's, for example, something that we realized. We said we're maybe a very, very good follow investor. We like to place substantial tickets, but we're maybe not the right ones to ask if you want to establish a board in the pre-seed and seed stage. Oh. And that's also something now that we're taking into Fund 2 that will eventually follow one day. We said, okay, we mastered that transition from like angel portfolio to now fund portfolio. We have sharpened our strategy, and we're now ready to fully execute and double down on what worked, while making our learnings with what hasn't worked and improving on that.
You have funds built by financiers and people that are very experienced in venture, where all of these things would not be described as much as a learning story. Some of these are super successful. Some of them are less successful and are not able to raise 150 million and not able to get into those companies and so on. So it's super interesting dynamic going on here, right? Because normally for 150 million euro fund, it's oftentimes very sophisticated and very, drawn out, and it's almost checkbox exercise.
I would still say we're very sophisticated. So we just
very,
took us more time to build those processes from scratch.
I didn't mean sophisticated. I meant methodic and planned out and based on years and years and years of experience, where your situation is a bit funny because you have with massive power in the founding team and yourself, with incredible angel track, incredible ecosystem built around you, both in terms of the entrepreneurial community from having, the founders having built such great companies before. And then, of course, also Felix's work with Bits and Pretzels, and you also run a very powerful entrepreneurial community. So you have these things that are super powerful and would make me super excited as an LP, right? Because that's exactly what you want to see. So you're great investors, right? But then you have this light side on the how do you run a firm, and which also then I could imagine also is a bit of an explainer of why is your LP base as it is, meaning all the entrepreneurial community are ready to come behind you, and many institutional investors are a bit more like, where's the guy who's done 3 funds before? Was that part of the fundraise process also, or did you just not engage the institutional community because you said, well, it's not our DNA, it's not what we want to do, so for that reason it's not our route?
I mean, like, very frankly, it was maybe a mixture of both. So of course we also said, if there's good institutionals coming along and they basically live up to our values of being very entrepreneurial and how we approach things, we would have been super happy to take some of those along. And I think that didn't materialize. In the end, we have been a first-time fund, even though a very strong angel track record. I think many of those institutionals are rather a bit reluctant to back emerging managers, not emerging investors, but emerging managers. And so we made that essentially our secret sauce. We said, we know so many people in the industry. We wanted to build, as you said, that entrepreneurial community. And this community is incredibly accessible. So we realized that by bringing together our portfolio founders with entrepreneurs that have built businesses maybe 20 years ago, maybe 10 years ago, maybe even active entrepreneurs, and up until today, it's incredible value add that we can deliver that goes way beyond the money that funds typically try to sell to founders as a commodity. But we actually have that very vivid collaboration with LPs, with the Scout network that we run, that we call Fellows amongst Europe. And essentially we made it our core mission to bring people together, to believe in the magic of many, as we call it. So to basically have people that are incredibly active, incredibly accessible for each and everyone's benefit. And we are just a community who's putting the wrapper, as the name 10x Founders says, above all of that. But in the end, it's all about the people that we have in that network, and that we bring together the right people at the right point in time for the right kind of matter.
Yeah. I also think that there's a special thing around you, which is that you're a first-time fund, 150 million, which means that when you look at the fund of fund landscape, at least in Europe, you have a lot of smaller fund of funds for whom it doesn't really make sense to do 150 million euro fund. And then you have a lot of not a lot, but you have some institutional fund of funds who can do or like the larger funds, but to whom, because they like the larger funds, they are not super happy about first-time funds.
Totally.
So I imagine that there's also this given this bifurcation of the fund of fund ecosystem that cares about Europe and thus actively deploys here, you kind of also fall between two sizes, I imagine.
I think that's very fair to say. In the end, I think what's important to stress is that there's, of course, not only fund of funds investing into funds as 10x Founders, but we have a huge entrepreneurial community behind us, so entrepreneurs, business angels. But we also have now the first family offices committing, or that we are in talks with. We particularly like them. They bring, it's like also that entrepreneurial DNA, entrepreneurial values to the table, even though maybe the principal of this firm has already built businesses 25, 30, 50 years ago. But they're still very, in their thinking, very entrepreneurial. They want to engage in such communities, maybe co-invest with the right people. And it just feels that it's a perfect extension or like addition to some extent to our DNA. And so I think that's at least one core area to explore for us, but also for other very entrepreneurial funds, to not speak only with, let's say, like the very large or the very small fund of funds, but try to think very strategically about how you want to structure your LP base. And that was also one of the key learnings that I think we made over the course of Fund 1, and that I made particularly in the industry, that in the end, like fundraising is a bit like a sales process. You need to define your ideal ICP. The ideal ICP needs to fit your strategy. And if your strategy is to invest entrepreneurially, then it's also just the right thing to take entrepreneurs along that eventually back you, because they will benefit more from the overall ecosystem. But in the end, they will also be way more active in collaboration, in deal flow sharing, in references, in co-investments, in portfolio support than maybe the traditional bank or institutional, maybe pension fund would be. I say all of them still have a very good right to exist. And I think at a certain point in time, we will also need to think about how to provide a bit more, what would you call it, but stability into the LP base, because entrepreneurs also think about their asset allocation very entrepreneurially. But if you find an institution that's not backing only one fund, but 2 funds or 3 funds, after getting to know the team, I think that this has also a lot or a huge value add. And I think eventually it will come down for us to actually mix those 2 worlds where we know we have stability in the fund, we know it will exist for the next generation, but on the other hand, we can always live up to the very entrepreneurial value that we have at the core of our DNA within the firm.
Yeah, and you always see this development as well. You go from the entrepreneurial-minded LPs that are typically smaller in the beginning, and then as you get a bit more settled in your ways and get a bit more the flavor that the large institutions like, you then start to professionalize or institutionalize the LP base. It's just the process you would expect. Could I ask you a bit about the overlap / collaboration with Bits and Pretzels? How do you leverage it? Is it run as something that is part of 10x Founders, or is it run as 2 separate organizations, separate CEOs, and so on?
Yeah. I think that's very important to stress. In the end, there's 2 separate teams. Yes, we collaborate and we like each other. So I make introductions to the Bits and Pretzels team for potential speakers on stage. They are collaborating with us. So there's Andreas, for example, from my team, who was the head of jury for Bits and Pretzels and was then putting together basically the jury for the pitch competition, where we're always super happy to help. But essentially, it's 2 separate organizations, 2 separate teams. It's not that we organize the conference. We really like it, and all of us are there, and we run the 10x Founders Lounge each and every year on one part of the venue, which is always very well received. But in the end, as you said, separate CEOs, separate decision-making. The only thing that we essentially share in terms of people is Felix, who started the Bits and Pretzels conference, and he's one of the founding partners of the fund. And obviously, I think it would be silly to not exploit synergies that we have eventually. But the team at Bits and Pretzels is doing an amazing job to put down such a beautiful conference, get all of those people on stage, get all the participants to Munich, to the Oktoberfest. And we're super happy to be, let's say, like one fund out of many, but one where we have very close ties to each other and know we can trust each other whenever we need each other.
Where's the team based? Are you all in Munich? You're not, right?
All of us are in Munich. So we started a fund here 4 years ago. The partners at the center of living here. And we believe it's just a very good place to be at. So the ecosystem is very vivid, very active, a lot of tech talent coming out of CDTM, of the Technical University in Munich. We have a lot of like DAX companies from the stock exchange that are located in Munich. So it's a good place to be in. And I think it takes us not even 2 hours to reach 95% of all European unicorns by plane with a good airport. So we are somewhere at the center of Europe, and that's why we play to that pan-European strategy too.
What is your take on the viability of being a pan-European fund out of one place? Like, give me the Steelman case of why that's possible. So you said 2 hour from anywhere to anywhere?
I think that strategy or that talk would have been totally different maybe 10 years ago. But I think particularly COVID, as in many other industries, has just accelerated digital adoption. So people are very used to meet over Zoom, to not always and only meet in person. I think what we try to do is still to meet people further down the process whenever we have met them, diligenced them, liked each other, to meet in person. I think it just gives a very different flavor in terms of relationship. But like many of the things in terms of groundwork can essentially be done from one place. And well, I don't want to exclude that within like one of the next fund generations, we actively speak and decide for opening up another shop, maybe in Berlin to cover that ecosystem better, in Germany, maybe in London, maybe in Paris. I think all of that is still very open. But so far, we have made very good experiences. And if you could look into our current portfolio, I think we still have like 30%, 40% maybe of our companies in the German-speaking areas. But there's another 30 to 40% that is actually truly pan-European. So there's 2 companies in Poland, there's 2 in Spain, there's 1 in the UK, there's 2 in Paris, there's 2 in the Nordics. So we can actually, and we have proven that we can invest even from one place in Europe with a pan-European approach. and this even covers the US, with that one caveat, as I said, that I think if you eventually want to win deals and work with the best entrepreneurs, in the end, it always comes down to personal relationship. And this is typically best built if the groundwork is done, but you then meet in person, you have a handshake, you look into each other's eyes and say, okay, this is like this is the one person or the one team that I want to work with for the next 10 years. And that's essentially the time that it needs to build a big business. And as a side fact, I think that's longer than the average marriage in Germany. So better pick wisely.
I think what I would say is that it depends a lot on the basis from which you build, right? So you guys are so embedded already as angels. So, you source via an established network more than from a large brand or more than from,
And don't underestimate that we're not alone. And I think that comes back to the principle that we said, that we operate as like the magic of many. So even if we are not active or not present on the ground in many ecosystems in Europe, first we travel a bit. That's why we met in Bucharest. I think that's typically not the VC hotspot, and we wouldn't open a shop there even in the coming years, most likely, even though it was a beautiful city and beautiful experience. But we also have what we call the Fellows program, where we work basically with 50 people, more like in a scout capacity, that sit in those local ecosystems and that work very closely as part of our community. And the same is true for the network that we build. So with that very unique position of either leading rounds, but also being able to follow, we're just a very good friend of many of other funds that sit maybe in some of those areas where we're not having a local presence, being in Berlin, being in London, Paris, but also in the Central Eastern European countries. Being friendly in venture, I think, was always helpful. And it particularly is if you only have one office and you always rely and can rely and want to rely on people that collaborate and have the same entrepreneurial, but also very collaborative DNA as we have.
I personally think that for many, it's not viable at all. And it's not trustworthy.
Most likely.
I don't think that it can credibly be said that you can do it. And then there are a handful of teams every year that can do it, that can credibly say, we're coming to market with a new fund and it's going to be pan-European and we're doing it out of X location. I think it's incredibly hard, but I think that, 10X Founders, I think that the capacity level of the GPs and yourself, sorry for using an exclusionary term there, but I would always stress to anyone wanting to do this, check out a team like, the team behind 10X Founders and then say, really, do we stack up against them? Because I think that you're putting an extremely high bar for yourself if you want to be pan-European and not vertically focused. So just word of caution there, or at least from my side. And it's just so difficult. Okay, so Nico, tell me a bit about yourself, your philosophy and life learnings. What's guiding you?
Yeah, very tough question. Also, when you asked me that question to prepare for, but in the end, I think when doing my reflection, I came up with two common themes I think that's worth talking about. And the first one is when I talked about being born in France, but growing up in Germany, French father, German mother, I was always living a little bit in between. So I get into huge struggle when both teams play against each other for the Soccer World Cup. And so maybe it's my dad and me then on the couch at home to shout and cheer for France, whilst my younger brothers and my mom are more for Germany. And I always kept on coming back to France. My grandparents are still there. I did my exchange semester at university there. I really enjoyed that theme of like being a bit of in between and like combining two different worlds to some extent. And very funnily, then I rediscovered that theme also from my study background, where I realized, okay, I did computer science and finance. I was good at Monopoly when I was a kid. So I had that kind of commercial mindset from the get-go somehow. I like that. But just doing something in economics just felt a bit odd, maybe a bit boring. So I mixed it up with another discipline and now realized that with that background, maybe it's something that flourishes very well in venture because I understand technical founders. I'm not a coder, I'm not an investment banker, but I still get what people do if they want to write software or build hardware. But on the other hand, I understand go-to-market, commercial terms, and I'm very commercially savvy. And so that theme of like a little bit of in between feels very rewarding right now. To combine, let's say, like insights from different disciplines and bring it together for a good cause.
I'm a pure social sciences guy, and fuck, I hate
There's
myself.
also a good reason for that, man.
I hate myself for taking the easy path 10 years ago or 15. That said, I don't think I would have done very well because I'm not a very technical person. So tell me,
there are many more people out there that are way more technical than I am. Don't get me wrong. I think in the end, I would always say that I'm a generalist. So I'm above average, maybe in many of the things that I do. But in the end, I'm not a specialist in any of those, or either or. So there will always be people that are better than me whenever it comes down to like one specific topic. But it's essential, at least as I believe in venture, to have that holistic overview, to combine insights from many different disciplines. And so sometimes I feel very privileged that a generalist as me eventually found a good place and a good job to work in, and a good profession that actually honors and rewards exactly that kind of like in-between generalist profile that I bring.
Yeah, and the beautiful networking capability of yours. I've been on the receiving end of it, and thank you so much.
Yeah, that's maybe the second theme where I always felt like I want to surround myself with the right people and with the best people. And like from the get-go, to give you a little bit of a context, I was the oldest brother of 4. So my mom always had someone to take care of a bit more urgently. So I was always very flexible, driven by ownership from my early childhood. I really enjoyed that. But then I always picked people where I could learn from. I said, okay, if it's not my mom, not my dad, we have a brilliant relationship, by the way, by now. But we always knew that I always knew I had to organize a bit my own life and find the right people that support me on that and provided me with trust, but also challenge me, and that are generally interested in my personal development. And I'm very lucky to have found such people at different internships I did, also in full-time capacities. But right now, there were some people somehow spotting something. I don't know what it exactly was, maybe a bit of talent, a lot of motivation, a lot of drive, and a desire to execute, and then took a bet on me, and eventually, hopefully, I never disappointed them. But it's that kind of like mixture of bringing together the right people, surrounding yourself with people you can learn from, that challenge you, but it still always operates with a very, very healthy trust basis. Is something that I would recommend to others. But for sure, also one of the key themes that I try to center my life around.
I at least have come to massively appreciate you, Nico. Just after a couple
Thank you
of
so much, Andreas. I do too.
Tell me a bit about continuing this vein of digging into Nico said. Tell me a bit about your biggest learnings in venture.
I mean, like in the end, I'm only there for 4 years, but still a lot of stuff to learn. And I think the first thing that I eventually learned, and particularly if you come from university where you're just like 1 out of 800 people, maybe, in venture, reputation really matters. So it matters who you are as a person, because in the end, you're selling money, more or less a commodity. But in the end, it's people investing in people. And being a kind, but also very curious and caring person, I think is something that can be really helpful in building relationships, and particular relationships that should outlast the next decade, the next 10 years. And frankly speaking, I also see investors from non-brands basically, that are winning deals against other investors at top brands, because in the end, they may be just like the kind of person, and they click better with the founders, because in the end, we're all humans, and we want to build relationships and be surrounded with the right people, no matter where they will work at. And so the personal reputation is something that's, in my eyes, something that's very, very important in venture, maybe in general in life, but particularly in venture. And I think that brings me to the second point that I learned, where I said, if you look into companies, even the most successful ones, we touched upon it already, like many of them have faced bankruptcy at least once in the whole company life, but still they managed to move on. And in the end, I think their path to success, people always expect it's very linear. You can predict it from the beginning. You know what to expect. In the end, it sometimes goes in circles. It goes from left to right. You have some setbacks. It's just about how do you deal with those kind of obstacles. And the same is true for people as for companies, and like adapting to this reality of like allowing for those kind of setbacks, allowing for obstacles to happen, but also accepting that there's so many unknowns in building a company that in the end, all stars need to align to eventually build one of those generational businesses that we will talk about in like 10, 15 years again. And all of that takes time. And I think that's my biggest third learning, whereas venture is an incredibly long-term game. I did a bit of consulting at the side when I was at university, like all of that, always like a project, 3 months, you went in there, you put down a strategy, you put down together a very beautiful PowerPoint presentation, and then afterwards you were just gone. But venture is different. You take ownership. Building those companies takes 7 years, 10 years, 15 years, 20 years to eventually bring them to a hopefully also financially good outcome for all of us around the table. And this is also why feedback cycles are extremely long in ventures. So until you have returned the first money, which can take those 7 to 10 years to investors, I also personally have absolutely no clue whether I'm doing a good job as an investor or not. I hope I do, but
that's not
all those
true,
proof
right?
points to be seen in the next couple of years. So I hope we do another session in like 7 to 10 years when I can bring some more proof points that I'm
From your
not at the
you'll
wrong
bring your
place.
yacht. You'll bring your yacht as proof point. No, there's a bunch of proof points along the way, right? But it's hard externally to diligence whether someone is a good investor unless you spent real time with them. But I think that once you've seen a few good ones, you can recognize it. Okay, so let me ask you. I love this question. A strongly held belief that you have recently had to change your mind on.
For me, it's like when you asked me to prepare, I came up with, let's say, like two different things. And the first one is more from my personal note. The second one is from a professional note. And frankly, I also love that question. It was really challenging, but I liked it. So the first one was in a personal context. I'm currently doing a coaching program with a coach in the UK. I absolutely love her. She's doing a fantastic job. And she actually pointed me at like one belief that I always had, where I felt, particularly after playing soccer for 15 years on like a competitive level, that like whenever I put a lot of effort and a lot of time into things, that I can maybe achieve what I always wanted to do. And I think that's one of the beliefs people are taught to just put down the hours, put some extra effort, and you will get what you want. But I think in the end, and I think that's something where I had to change my mind, it all comes down to doing what is really bringing you joy, because then it doesn't feel like effort. It doesn't feel like work. It does feel super light to essentially end up where you want to end up. And not everybody needs to get into VC. Not everybody wants to become a doctor. Not everybody wants to do an apprenticeship and work in the industry. I mean, like in the end, you just need to find your perfect place. And I think you have done so once you realize that all the time you spend within that profession or that hobby, whatever, whenever it feels super light to do, and it's more like joy and fun and not hard work.
I think there's an important point there in that, and yes, it is a personal note, right? Because we can all get, like many of us can get so good at grinding that we just do it. And don't think about what it does to us and our happiness and so on. I think that you're absolutely right that for a high achiever who have always been so, that did not come from itself, right? You really have to then, if this is your mindset, I've been there myself, then ask yourself, am I grinding just because I'm good at grinding? or am I grinding because I love what I'm doing?
Frankly, I think I was for a very long time in my life, and I'm now very fortunate to have found a job that doesn't feel like a job, because I was hanging around at demo days and pitch events and the founders during my time at university anyway. Like when I signed my contract in venture, I felt like, okay, I now met my hobby of profession and I'm getting paid for what I love doing. And I think that's hopefully also the kind of like passion and positivity I try to transport and deliver whenever I speak with founders or at investors or on podcasts. And in the end, I think you need to find something where you really enjoy doing what you do. And venture is one of the things that I really do.
How about on the professional note? Where have you had some strong theses where you have to say, I was wrong?
People will maybe think that I'm a little bit of a late laggard in that sense, but I think in the beginning, everybody was just laughing about like ChatGPT and artificial intelligence, and like the term is already around for the last 10 years or so. And I sometimes felt, particularly in the beginning, that it's a bit of a hype. I have seen Web3 hypes. I have seen grocery deliveries as a hype. I've seen FBA aggregators as a hype. And I wasn't too sure in the beginning whether AI and like technology built on top of LLMs will not just be just the next hype that they will disappear in the next couple of years. But then, frankly, we did a couple of investments in that space. We spent a lot of time with founders, diligencing the technology, really understanding what's behind, and frankly, also seeing the impact of artificial intelligence in general, ChatGPT or OpenAI as maybe one of the first ones only, and not the only one. We saw, okay, this is really going to change our lives. And in many different facets, we have to decide whether it's good for the good or for the worse in the end. And I think we have a huge responsibility also as humanity to deal with technology. But in the end, I'm very clearly convinced by now, and I changed my mind in a way that I now very strongly believe that within my lifetime, hopefully there's a couple of more years to come, we will see that machines are not only faster, more efficient, more reliable in executing tasks as humans, but they will also be smarter. And then it all comes down basically, how do we deal with that kind of like new situation? And that superiority that tech will maybe have over us humans. So it will be a huge challenge for all of us, but I'm glad to be alive in such a time, because I think we see technological, but also societal and political change way faster than we've ever seen in the last years and decades.
I think it'll be absolutely incredible next 20 years. You will not recognize the world today, in 20 years. It's gonna
humans will still be around. I'm super sure on that.
Yeah, we'll be around in 20 years, but it's like, to me, it does not seem weird. A lot of things I never, thought was around the corner. There are many things that I'm like, in 10 years, this is going to be 100% out there.
Absolutely.
It's truly bonkers to me to think about. Okay, final question. Then we need to wrap up. Top tips for VCs or fundraising. What's your take there?
I mean, I try to break it down into 3 key learnings, and then by that also top tips that I would give to other fund managers raising their funds. And the first one is, and we quickly touched upon that you really need to know your target audience. And by that, also your strategy. So you need to know whom to approach, with what kind of messaging, what kind of story, and what could this person next to money potentially bring into, for example, the community that you want to build around the fund. I think that was one of the cornerstones within 10x that we talked about, that we've thought very strategically about our LP base, and we still do. And I would always recommend doing so, and that there's a fit to the overall fund strategy. The second piece is, and that's a bit unfortunate, but in the end, it's about relationships. It's about building relationships between people that back you and trust you with your money. So it just takes time. So raising funds is that kind of relationship game. And you need to spend time with people to build trust, to build a relationship, and to eventually then potentially secure one of those commitments to your fund and to win in the long term. And the third one I typically give, and I really like to think about it as a notion, is like the fund size that you pick is essentially your business model. Because in the end, you need to make the economics work. You need to make sure that you're returning money to your investors, hopefully a bit more than what you initially collected. By that, there's a lot of decisions to make. So are you more like a management fee fund that lives out of that with like more stable returns, larger volumes? Are you more a carry fund, a bit smaller but higher upside, the volatility at the downside? Do you want to lead, or do you need to lead, or follow in rounds? What's your follow-on strategy? So I think it all comes down to many of the points that we discussed today, that in the end, you need to set your strategy clear, pick the right fund size according to the business model and according to the secret sauce that you have to eventually cut through the noise, work with the best people, and then hopefully contribute to a very, very good and flourishing ecosystem in the long term.
Just on the relationship note that you said there, because you said, and maybe it's a bit unfortunate that it's a relationship game. But
I like it.
Honestly, I think
if you're raising, then you realize
sometimes I want to say to people, well, you are asking for 20 million. Isn't it fair enough that it's going to take a while before you get that? From the individual, it's 500K or 100K, but that's still real money. And I think that some people would do well to consider what this really is that you're asking for. They might be wealthy, the people that you ask for that 100K or 20K from, but you are asking a really, really big amount. So awesome. Nico, thank you so much for joining me on the podcast.
Thank you so much, Andreas. It was an amazing experience, and hope we can do another one of those very soon.
We'll do many more to come.
Here's a few words from our beloved sponsor. This episode is brought to you in partnership with 0100 Conferences, which organizes intimate networking events connecting LPs and GPs in private equity and venture capital firms across Europe. A more legitimate setting makes it easier to stand out, get noticed, and leave a lasting impression. Don't miss the opportunity to engage in highly effective networking with investors focused on the DACH region. Their upcoming event, 0100 DACH, will take place in Vienna from February 18th to the 20th at Hotel Savoyen, Vienna. Attendees will include LPs and GPs like Boulderton Capital, Leonards & Co., KfW Capital, and many more.
Whoa! Thank you!
Save the date. February 18th to the 20th at Hotel Savoyen, Vienna.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.